Morning traders. Before we start, stay until the end of the video because there will be a short multiple choice quiz based on today's analysis, so you can test your understanding of liquidity, inefficiencies and price action. If you find these daily breakdowns useful, consider subscribing for consistent XAUUSD analysis focused on structure, liquidity and smart price behavior rather than guessing market direction. Now let's begin with the broader context. Yesterday's market broke the low of the previous day, which was an inside print that we discussed in previous analysis. That inside day represented compression, meaning the market was storing inside it the energy inside a tight range. Once the inside day low was taken, that sell-side liquidity release helped push the market lower. Importantly, the move happened after price reacted to the daily sell-side imbalance or day SiBi, which acted as a strong resistance. This was what we had marked. And you can see that the market had touched it the previous day. So this was the day SiBi. During this move down, the market has created a few FVGs, which I will mark right now. So you can see one here. They're minute, but you will have to go into the minute details when you're trading. So this is a 1 hour. SiBi. And we can see more. So let's copy this. And move it here. And we can see another one here. So after rejecting that imbalance, the market started moving lower aggressively, which formed these three separate sell-side imbalances, which show that the selling pressure happened with strong displacement. These inefficiencies are important because they often act as resistance if price retraces back into them, and you can see that it is behaving as a resistance here. So today the key reaction that we see as of now is from this SiBi, and we now need to see if the market continues delivering lower prices or retraces to rebalance these inefficiencies. So as usual, we go to our day chart and we mark the previous day's high and previous day's low. This is your PDL. And this is your PDH. So the previous day's high sits at 5191.7 and the previous day low sits at 5055. This defines today's dealing range. These levels define the current daily trading range and act as natural liquidity zones. The previous day low is particularly important today because it represents the area where the inside day low was swept. Once liquidity below an inside day gets taken, the market often continues moving in that direction because the stops below that level have already been triggered. At the same time, if the market retraces upwards towards today's day high, becomes the next key buy side liquidity zone where the market may seek stops. We now look at the daily time frame, and you can see we've already marked anything that's important. And this was something I had brought up in a previous video as well. There's a day BC. So you can see that the market is currently bouncing between the two, right? So this is important. That being said, it's already reacted from here and it's come to another BC, so it's bouncing to and fro. When the market reacts from a higher time frame imbalance like this, it often signals the institutional selling interest exists in this region. But the market has also come to a BC. So we will now have to watch rather than predict. As long as the price remains below the imbalance, we can look at valid sells, and as long as it's above, we can look for valid buys. We now move on to 4-hour, and we can see there is one 4-hour SiBi which was formed yesterday. SiBi, right? So the 4-hour time frame helps us identify medium term inefficiencies that price often revisits during retracements. If price starts moving upward today, the market may attempt to rebalance some of the imbalances left behind during the sell-off. The 4-hour zone can act as a temporary resistance area, especially if they align with other liquidity levels. We now zoom into the 1-hour time frame, where the key story of the current market structure appears. During yesterday's sell-off, as I showed you, there are 3 sell-side imbalances on the way down. The SiBi forms when price drops aggressively and leaves an imbalance where selling pressure dominates and price trades inefficiently. These are areas which can often act as short-term resistance zones. Right now, the presence of multiple stacked SiBis above the current price suggests that the market can push it down. And you can see it has already reacted to the SiBi here, and the market pushed it down. This structure creates a type of layered resistance where each inefficiency becomes a potential reaction point. So if the market attempts to retrace today, watch how price behaves at these 3 imbalance zones, which can be critical. But you also need to observe that today's move has made a BC here. So we will need to wait and watch how it reacts. 1-hour BC, and this is a freshly formed BC, because of which it can be very powerful. We now analyze the previous day's volume profile. So we start at 1800 hours, right? Let me just look for the 1800 hours. This was where the market started until 1600 hours. So we now mark the value area high, the point of control, and the previous day's value area low, right? So the point of control is the price where the highest trading volume occurred during the session, making it the market's perceived fair value. So when price moves away from this level, it often returns to it as the market seeks balance. The value area high and the value area low represent the upper and lower boundaries where most of the trading activity took place. These areas can often act as short-term support or resistance, especially during range conditions. So the key levels to watch today: combining volume profile levels with psychological levels. The value area high sits near a psychological level, which is 5175. So that level can be important. The POC represents the market's fair value from yesterday and sits around another psychological level at 5150. The value area low aligns with the psychological support at 150 again. When volume profile levels and psychological levels align, the reaction from the market often becomes stronger because multiple types of liquidity exist in the same area. So, to summarize, yesterday the market broke below the inside day low, confirming the downside expansion from the earlier compression. That move occurred after rejection from a day sell-side imbalance, which acted as resistance. During the sell-off, the market created 3 separate 1-hour sell-side imbalances, which now sit above price and may act as layered resistance if the market retraces. So today the key focus is watching how price reacts around these inefficiencies and around the volume profile levels, the VAH, POC and VAL, especially when they align with psychological levels. Stay patient, stay disciplined, and focus on how price reacts around liquidities rather than predicting direction. See you tomorrow.